fairly soon. These were the two magical words from Fed President Jerome Powell last week during his question and answer session with reporters. Last week, the Federal Reserve concluded their two-day Fed meeting and released their monetary policy statement, and they left their Fed funds rate unchanged at 5.25 to 5.5 for the fifth meeting in a row. This meeting had some additional interest to it because once per quarter, the Fed releases their updated Summary of Economic Projections report. This report showed some interesting projections from Fed members. They still signaled that they would possibly cut rates 3 times in 2024, despite projections of higher GDP, lower unemployment rate, and higher PCE inflation numbers. Like all 3 of these projections would typically discourage the Fed from cutting their Fed funds rate. I want to remind you guys, the Fed funds rate does not have a direct impact on long-term mortgage interest rates. So what did help rates in this Fed meeting was Jerome Powell addressing their quantitative tightening program, otherwise known as QT. Jerome Powell stated that Fed members, now I quote here, Jerome Powell said, "We discussed slowing the pace of the runoff fairly soon." This literally helped mortgage interest rates improve by approximately 3/8 of a percentage point last week. Now, I don't know if you guys realize this, but the Federal Reserve holds $7.5 trillion in bonds on their balance sheet. They've let approximately $1.4 trillion run off their balance sheet in the past 21 months. The current pace of their runoff is about $95 billion per month. Slowing this down, slowing the pace of the runoff would reduce supply to the bond market, thereby pushing bond prices up, and inversely, yields would come down, and you guessed it. This would help mortgage rates come down as well. So now do you see why these two simple words, fairly soon, were so magical for us in the mortgage industry and you guys in the real estate industry? Let's hope that the Fed starts slowing the pace of their runoff very, very, very soon. So where did rates end up this week? Well, the markets are closed today for Good Friday. The conventional conforming 30-year mortgage rate was sitting at 6 5/8 with an APR of 6.806 as of Thursday, March 28th, with buyers paying approximately 1% in discount points to get that rate. Government rates for FHA loans and VA loans price out approximately 3/8 to a half point lower than that. You can do the math on those. Of course, I'm basing this on a perfect loan scenario, which I describe as someone purchasing a single family home as their primary residence with a 760 or higher FICO score and a down payment of 20% or more. Your specific situation may differ, so make sure you call a mortgage professional to get the best breakdown for you and your specific scenario. So what's next, guys? Well, even though the markets are closed today for Good Friday, the Personal Consumption Expenditure, or PCE report, was released for February. PCE measures inflation at the consumer level, and of course, inflation has a huge effect on interest rates. I don't know if you guys know this, but whenever you hear the Federal Reserve or the media talking about their target inflation rate being 2%, they're literally referring to this core PCE number. This is the Fed's favorite measure of inflation, and this is the rate that they want to get down to that 2% target. So it's very important. Today, the headline number for February came in at 2.5%, and the core reading, which strips out food and energy prices, came in at 2.8% year over year. This was pretty much in line with what market expectations were expecting. These PCE inflation numbers seem to be a little bit stuck over the past 2 to 3 reports. Not much progress is being made in way of getting these numbers down. Hopefully it starts going down soon. The markets will have to wait until Monday to process and price this news into the markets. As I mentioned, today is Good Friday and the markets are closed. Next week also brings some big market moving reports, one of which is the BLS jobs report, which also gives us that unemployment rate. This will certainly have an impact on mortgage rates. I'll keep you guys updated, and I'll give you the scoop about what happened and what happened to rates in my next week video. Well, thank you so much for watching this week's video, and don't forget to subscribe to my channel and turn on the notifications so you don't miss out on any upcoming information and videos. And as always, let's get better, let's close more deals, and until the next video, I'll see ya.